Guess who's back? I know it has been a very long time coming, but we are here. It has been a long year off from YouTube, but with me adjusting to parenthood and transitioning into a new career field and just adjusting to this new world in itself, it's just been necessary for me to take a step back, but I got you guys. I'm finally here with the return with good financial literacy talk and real estate insights. So that being said, let's just get right into things. Before we do any of that, make sure you turn that subscription button gray and that thumbs up blue, and let's get into things. So today's topic is some of the biggest mistakes to avoid making to allow yourself to get into the real estate space. As I began my career as a mortgage broker, I speak daily to clientele, and I'm noticing a lot of mistakes people are making that are actually holding themselves back from getting into the real estate space. So what I want to do is highlight some of the things to avoid to make sure that you are in the perfect position to get yourself into real estate as soon and as efficiently as possible. So that being said, let's get into the first and biggest mistake. And the mistake I actually made myself when I first got into real estate was not making a plan and figuring out your budget. And what I mean by that is not speaking to your mortgage professional, such as myself, to figure out exactly what it is that you qualify for on a financing level. Because unless you're actually buying your property outright, straight cash, because you're balling like that, you're actually going to need to mortgage some of the cost for that house in the form of a mortgage. So let's just break it down and look at some raw numbers. Let's say you're looking to buy a property that's costing $500,000 and you have a down payment of $100,000. That means that you have to mortgage $400,000 in a loan. But before you can do that, you have to make sure that with your income and your credit score and all things in between, you actually qualify to carry a $400,000 mortgage. Or you run the risk of losing your down payment and the house itself. You don't want that, neither do I. So make sure you do your part in talking to your mortgage professional, figuring out exactly what it is that you qualify for so that you don't go in blind and hope that you can actually qualify for the property that you just put your offer in for. Also, once you devise said plan and figure out where it is that you stand, you and that mortgage professional can figure out what it is that you need to do in order to increase your budget, such as maybe you need to go and get another job and get some more income to your name on a yearly basis. That way you can qualify for more of a mortgage. Or maybe you need to increase your credit score so that you can qualify for a different type of lending, which is at a better rate, which means that you can afford a larger mortgage. Knowing all of these things in advance can help you optimize your position before you get into real estate. That's the first mistake I see a lot of people making. Make sure you know your budget and make sure a plan is devised. That leads me to the second topic. A lot of people think that they need a much bigger down payment than they actually need. I know that we've all been brainwashed into thinking that 20% is this magical number which you need your down payment to be, but that's simply just not true. You can get into real estate with as little as 5% down as your down payment, meaning that you'd have to mortgage the remaining 95%, but we'll get into that really quickly. I just want to really let people know that 20% of a down payment is just the cutoff point in which your mortgage needs to be insured or not. Any down payment that's less than 20% is gonna need mortgage insurance on it, meaning you're gonna have to go and contact someone like CMHC to insure your mortgage because it'll be a high ratio mortgage, meaning that the amount that you're mortgaging is gonna be above 80% of the purchase price. So let's look at an actual example. Let's say you've spoken to your mortgage professional, once again, that would be me. And I've let you know that based on your income, based on your credit score, and everything else in between, that you qualify to carry a mortgage of $475,000. But you're looking at a property that costs $500,000. That means that the difference in between is what your down payment needs to be. If you put down $25,000 as your down payment towards this property, you put down 5% and you're going to be mortgaging the remaining 95%. And because you've spoken to your mortgage professional, I've let you know that you qualify to carry this 95% mortgage. But in a scenario where maybe you put down 5%, meaning that the remaining 95% that you have to mortgage is above what you're qualified for, that's where you run into problems. This is why point number one that we just talked about in terms of making a budget and figuring out exactly what it is that you qualify for is crucial, because from there you can figure out what's the minimum that you're actually going to need to successfully purchase a property at that price, and also doing it comfortably. And that leads us into point number three, credit score maintenance. I'm literally in awe of the amount of people I speak to on a regular basis and ask them what their credit score is, and they tell me they don't know. Knowing your credit score is so crucial, because without knowing what your credit score is and why it is what it is, you can't actually improve it. And your credit standing is very impactful on the type of lending that you qualify for in terms of making your budget, figuring out your pre-approval, and knowing what you're qualified for. That being said, there's a handful of different service platforms that actually give you your credit score for free. So it's just a matter of you taking it upon yourself, being responsible, and knowing what your credit score is on a month-to-month basis so that you can track where you are and also figure out what it is that you need to do to improve your credit score. Once you're aware of what your credit score is, then we can actually identify what it is that we need to fix in order to bring your credit score up to a favorable score. For example, maybe it's your utilization that's a little high, which is why your score is what it is. Then we know, okay, let's tackle some of these debts, bring down the balances so that your utilization is lower and your credit score can increase. Maybe your payment history is the reason why your score is where it is. Then we know, okay, you know what, let's set some reminders, let's set some alarms so that you're paying all of your bills on time, and slowly watch your score increase over the course of time as you start making your payments on time. But without knowing what it is that is making your score what it is, we can't identify where and what needs to be addressed to increase your score. And it's one of the most simple things for you to do. There's literally an app for everything these days. All you've got to do is set it up and be aware, and then all the things after that will fall right into place once you know what it is that you have to rectify. Number 4 also ties in with number 3, which is your debt service coverage ratio. What the debt service coverage ratio is how much of your income already goes straight to debts that you already have outstanding. I don't think people realize how much opening up some of these debts and signing up for some of these loans and buying this car that may be slightly out of your budget can be impactful in terms of how you qualify for a mortgage and a home, essentially. Because you qualify for the mortgages based off of how much of your income is actually available to qualify for it. So if a lot of your income is getting gobbled up between outstanding loans and outstanding debts, then you actually don't have that much income to qualify for. Not much of your income is usable in regards to qualifying for a property. And that's what really can hold a lot of people back. So that's one of the biggest difference makers that I see, which is people who make good money, but also spend good money and have a lot of good money tied up in different types of debt. And the more debt that you can reduce, the better, because that leaves more income for you to use towards buying a property. Hopefully I'm making a lot of sense here. So let's just keep in mind to keep our debt to a minimum, because the less debt we have to our name, the more of our income can be used towards qualifying for a property. And that can make all the difference in making your dollars stretch. Last but certainly not least, I should probably get a drum roll for this one just because I feel like nobody's gonna expect this one, but when I say it, everyone's gonna be like, yes, you're right. Last but certainly not least, one of the biggest things I see holding people back from getting into real estate is fear and anticipation of the unknown. And when I say that, I understand. This is very intimidating. It is tough because this is probably one of, if not the most expensive purchase a lot of people will ever make in their entire lives. So yes, it's natural to be a little bit fearful of jumping into a purchase of that nature. However, I want to be very frank and letting people know that this is also one of the most beneficial purchases that you'll ever make in your life as well too. It's so powerful, it's so life-changing, and it's gonna be a foundational transaction in where you go in your adult life and what takes place after, because you're really setting the foundation for what it is that you're about to do in the future. And there's ways to mitigate that fear. Having the proper team of professionals behind you when navigating through the real estate space makes all the difference. Having a trusted mortgage broker, such as myself, in your corner to let you know exactly what your budget is, what your affordability is without having to forfeit some of your comfort and some of your flexibility going forward makes all the difference. Having a savvy and sound real estate agent in your corner to submit your offers and maneuver through different deals for you makes all the difference, because you know what you're gonna be doing is gonna be beneficial to you and also not sacrificing your comfort along the way. And having a support team behind you to let you know that what you're doing is the right thing and helping you really assess the entire situation to make sure this is right for you right now and in the future is so important. So you can mitigate this fear. You can mitigate the risk that comes behind making a purchase of this magnitude. But also, there's a huge handful of people I see on a daily basis saying, yeah, I'm just waiting for the market to crash. These prices can't keep going up. And granted, I personally don't think that these prices can keep going up like this forever. There is going to be a point where there is a dip of some sort. However, what I really want to remind people is, if the market is here today and continually going like this, even when there is a dip, the price will still be higher than where it is today. That's just how real estate works. Yes, real estate has its spikes, it has its ascension, and there are its dips over the course of time. However, on the grand scheme of things, real estate only goes in one direction. It's one of the most secure and sound markets there is to put your money into. As long as you hold on long enough, you will not take a loss in real estate. I know a lot of people like to highlight 2008, but I really want to remind people as well that that was more so about the mortgages behind real estate, not necessarily real estate itself. So that being said, I really just want people to be mindful that inflation is a real thing. As you wait, the longer you wait, the less power your dollar has. And that's why you'll hear a lot of people say the best time to buy real estate was 5 years ago. It's always 5 years ago, because over that 5-year span, real estate has only gone in one direction, and that's up. And I really don't want to see people waiting on edge for some crazy crash to take place that may never take place in the fashion that they're waiting for. And then they've waited months, years on end, maybe even decades for something that never came, when they could have been in the market from a long time ago, reaping the benefits of that growth in the market, as opposed to sitting on the sidelines while everyone else got in and reaped the benefits. So that being said, do not let fear keep you from getting into the real estate space, because there's a lot to gain, and I'd hate to see people just letting it pass them by. So that wraps it up. Those are our 5 points of some of the mistakes I see a lot of people making in the real estate space, and what I really want people to avoid making. So make sure you guys message your real estate professionals, get your team in place, figure out your budget, assess, vet and see who's the best realtor to kind of represent you in your deals as you go forward, and figure out what's best for you, because the quicker you do those things, the quicker you can figure out what you want to do and get active in the real estate space. Start making changes in your life that are gonna dictate where you're going from here. So make sure you guys subscribe, make sure you like, make sure you message me as well if you have any other questions, because I'm here to help. This is literally my job and I love it. So I want to see everyone achieving their goals. It's a new year, 2022. We're about to make really big, lofty goals, and we're gonna make solid plans to achieve said goals, and we're gonna execute. So make sure you guys lock in, sit tight. We got a lot more information coming your way, and let's get it popping, because this is only the beginning.